Here's a debrief of tasks 1 and 2 of AAT's sample assessment number 2 for drafting and interpreting financial statements. Both of the tasks are debriefed in this one video because they are related to the same set of data. Although in this particular sample assessment, the cash flow statement appears in task 1 and task 2 only asks for a statement of changes in equity. So you could do both tasks separately, but in this case we're combining the videos because they're linked to the same set of financial statements. So what are we given in the assessment? So we're provided with a statement of profit or loss for Ocean Limited and also a statement of financial position. So for both of these statements, the double entries have happened already. So when we are working on our answer, we'll need to recognize some of these numbers in our answer, but only once. We don't need to do a double entry because the double entry has happened already. However, below the statement of financial position, the question provides us with some notes. So the notes tell us about things like depreciation and disposals. So even though we won't need to do a debit and credit, we just need to recognize that these numbers will appear twice in our answer somewhere. And this is an important part of your exam technique, to recognize that if you only use the number once in your answer, then your answer is going to be incomplete and your cash flow statement will not work. So it's sort of like doing a double entry, but we're not actually doing debits and credits. The assessment then also provides you with a pro forma set of answers. So there's one for the operating activities, and then a second one starting with the operating activities and then continuing with the investing and financing activities. So you just need to remember that whatever number that we get at the bottom of the first answer will be our starting point for the second part of the answer. And for lots of companies, they actually produce this as a single statement in their financial statements rather than showing it separately. There is some space for some workings, although we'd recommend that you use the scrap paper in your assessment for workings because the workings provided here may not really give you enough space to be able to organize it fully. We're going to show you two different sets of workings in this video. You may prefer to use T accounts, so we're going to show you T accounts, but we'll also show you the working using these tables, which are equally good. So it's up to you, whichever works best for your brain. And then in task 2, we're asked to prepare a statement of changes in equity using the same set of data. So we will complete that as well. So in terms of technique, we'd recommend that you start with the statement of financial position, because the way that cash flow statements work is that we have a number in our statement of financial position for last year, and then there's going to be a variety of transactions to create our closing balance, which is the balance for this year. And in those various transactions between last year and this year, one or two of them may relate to cash. So what we need to do is understand what all those transactions are, identify the non-cash transactions, and then also whatever's left over will be our cash transaction. So we start off with property, plant and equipment, and in the sample assessment they provide you with a working for that. But what we're going to do though is to show you how you can use a T account for this. And you may find using a T account a bit easier to use. So this is our T account for property, plant and equipment. And the question gave us an opening balance. So we have a brought forward balance of 47,515. And we've got a carried forward balance of 72,916. Okay, so those numbers are in our T account. Notice that in the working just in the middle of the screen there, we've got a line set up for us already, the property, plant, equipment at the start of the year. So yeah, we could similarly do the same. So we've got 47,515 as our opening balance. Now, so let's go back to our question. So we've used those two numbers And what we'd recommend is you use the highlighter tool in the assessment to highlight the numbers that you have used as a control check. So what you'll be able to do is, as you work through your question, if you highlight all the numbers you've used, then towards the end you'll see if there are any numbers that you haven't used, and then that's telling you to go back and look at those numbers again. Next, let's move on to the inventories figure. So here we can see that the value for inventories has increased from last year to this year, and that means we must have spent some money buying those inventories. Now, the amount of money we've spent on inventories will be the purchases figure, which is part of our cost of sales. But our cost of sales is included in our profit or loss figure. So how much we've spent in total on all purchases will be included here. But remember, cost of sales makes an adjustment for the movement in inventories because of the accruals concept. It's saying that if we've not sold those inventories yet, we don't want to include the cost yet. So that means we still need to recognize that inventories have gone up and therefore cash must have gone down by the difference. So in this case, if you look at the difference between these two numbers, we have a figure of 869, and we need to recognize that in the top part of our answer. So here is the top part of our answer, and we've got our starting position, so perhaps it'll be useful for us to complete some of the captions here. So there's the captions. Remember, there are drop-down menus available for doing this, and you just basically have to remember what these adjustments are. Okay, so you just need to get them into your memory so that you can choose what these captions are going to be. So let's understand what's going on here. Let's do a bit of revision for this. So notice that we are not starting with a cash figure. Even though we're preparing a cash flow statement, our first figure is a profit number. And then we're making a load of adjustments to that because we want to convert that profit number into a cash number. So there's our first cash number, cash generated from operations. So let's have a look at a very simple profit or loss account. Let's suppose that we make some sales and we've got some revenue of, let's say, 1,000. And let's suppose we've got some costs as well, some cost of sales. Let's suppose that's 600. And that's going to give us a profit of 400. Now, if this business has no receivables and no payables, so they do everything on a cash basis, then we know that that revenue of 1,000 is cash and the costs of 600 are cash as well. But we know there's going to be some other expenses, so let's suppose there is some depreciation of, let's suppose, 100. So that depreciation is an expense which would reduce our profit down to 300. Now, in our cash flow statement, that 300 profit for the year is our starting point. So we've got our profit before tax of 300, but that's not a cash amount, is it? Yeah, we just identified that because we've got no receivables, that 1,000 is cash. And because we have no payables, that 600 is cash. And therefore the 400 profit is a cash movement. But that depreciation is not a cash figure, is it? So what we need to do to convert the 300 starting position on our cash flow statement, to convert that back into cash generated from operations, we need to reverse all the non-cash transactions in the P&L. So we know that depreciation is a non-cash expense. In the profit and loss account, it's shown as a negative number. Yeah, that's a minus 100, isn't it? And so what we need to do is just add back that in our cash flow statement. So any expenses in the profit and loss are positive adjustments at the top of our cash flow statement. If there are any positive numbers in the P&L, for example, if we made a profit on the sale of an asset, so that, remember, that profit number isn't cash, is it? The proceeds from the sale is the cash. So yeah, the profit would be a non-cash transaction in P&L, and it would be a positive number in the P&L, and therefore we'd show it as a negative number at the top of our cash flow statement. So having reversed that expense, we've changed it from a minus 100 in the P&L to a plus 100 in the cash flow statement. So that brings us back to the 400 cash position. So what about the inventories, receivables and payables? So in the simple example we've just talked about here, we said that for our revenue, there was no receivable and therefore the 1,000 simply was cash. But if there were some receivables, then that 1,000 wouldn't have been cash and therefore we'd need to make an adjustment to our profit number to come back to the cash received from those customers. And similarly with our costs, we assume that there was no payable, so the 600 was simply the cash expense. But if there were payables, then we'd still owe some money, and therefore we need to make an adjustment to find out how much cash we'd actually paid. So let's imagine that there was a payable of 50. So that tells us if we're showing an expense of 600 in our profit and loss, but we still owe 50, therefore the cash expense is only 550. We've only paid 550 to our suppliers because we still owe them 50. So you see that in our answer, we have the changes in inventories, receivables and payables because those three numbers affect the first two lines in our profit and loss. We need to make an adjustment to recognize that we may not have received all the cash from those customers and we may not have paid all those suppliers. So coming back to the question we're doing at the moment, we identified that our inventories went up by 869, so we need to put that figure in our answer. Now, what we need to think about, though, is that going to be a plus or a minus? We've identified, haven't we, that in our P&L, where we had a minus number for depreciation, we've got a plus number in our cash flow statement. So how is it going to work then for all these working capital adjustments? So if you think about our assets, so here's a big letter A for assets. And imagine that this is basically the balancing point for a seesaw for a balance. And on one side of our seesaw, we have our inventory and our receivables. And then on the other side of our seesaw, we have our cash. So this is the way that we'd recommend you try to remember, should it be a plus or a minus? So in this case, our inventory figure went up, and therefore we'd say that our cash goes down because it's just the other side of the seesaw. So yes, if our inventory goes down, our cash would go up. But similarly, if our inventory goes up, then our cash would go down. Okay? So whether it's inventory or receivables, it doesn't really matter. If an asset goes up in value, then the cash is going to go down. So in this particular case, we saw that inventories increased by 869. So we would want to show that as a negative number here in our cash flow statement. Now what about for payables? So payables is a liability, so that's just the other way around. So if the liability goes up, then the cash will go up as well. Okay, so there we are. That's our inventories. So I've used those numbers now, so I'm just going to highlight them to recognize that I've considered both of them. Next, we have our trade receivables. And in this case, we can see receivables actually gone down in value, hasn't it? So it's gone down by 646. So this is another working capital adjustment. And again, if we look at our seesaw, we can see receivables have gone down. So we think that cash is going to go up. So we need to put 646 as a plus number in our answer. And I can highlight those two numbers because I've put them in my answer. Next, we have cash and cash equivalents. So you see we have nothing at the beginning of the year, but we got 416 at the end of the year. So let me highlight that now because I'm about to put it in my answer. So that's going to be right at the very bottom of our answer that we have 416 cash and cash equivalents at the end of the year. Okay, next we move on to share capital and share premium. So often there's some sort of note at the bottom of the answer for this. So I'm just going to skip those two numbers at the moment, and I'll look at them a little bit later on when I've looked at the note. So notice what I'm doing here. I don't want to be scrolling up and down all the time looking for all the information I need. I'm just working my way methodically down the statement of financial position, so I'm making sure I don't miss anything out. But I know I'll have to come back to these numbers because they won't be highlighted. So if you move on to the revaluation surplus next, so I can see that we had nothing in the prior year, but there is a 4,000 revaluation surplus this year. So if there was a 4,000 increase in the revaluation, that means we must have increased our property, plant and equipment. So here's my T account for that. So I've got my revaluation, and that's going to be a 4,000 increase to property, plant and equipment. But that's not cash, is it? Just because the number's gone up in value, we've not received any cash for that. So we need to make sure we exclude that from our answer. Okay, so I've put that into my working so I can highlight it. I know I've dealt with that now. And then for my retained earnings, well, let's look at the difference between these two numbers. So this year we've got 11,242 and last year we have 6,190. So we can see that we've got a movement of 5,052. Well, that should be how much profit we've made for the year. But we can see that's not the case. Our profit for the period is 7,052. There is a 2,000 difference. So how is it that we made 7,000 of profit, but our retained earnings go up by 5,000? Well, that 2,000 must relate to dividends. Now, it could be that we paid those dividends in cash, but perhaps not. It will depend on whether or not there are any opening or closing dividend liabilities. So what I want to do is set up a T account for this to look at our dividend payable. So is there some sort of brought forward dividend payable, and is there going to be a carried forward dividend payable? But I know that there's been a charge, a 2,000 increase in the payable this year. So what we want to know is what's going to be the figure here. How much cash did we pay for dividends? Okay, so moving on then. So we've looked at equity and we've looked at retained earnings. So yes, I've used those two numbers just by calculating the difference. But yeah, that number hasn't appeared in my answer yet. But yeah, I need to somehow use that 2,000 somewhere. Right, next we have our bank loans. So we can see that our bank loan has increased by 6,100. So that must be cash coming in, and I can put that in the financing activities of our answer. So yeah, so we've got our bank loan, and it's 6,100 of cash coming in. Next, we have our payables. So that's another working capital adjustment. So we can see in this case, payables have gone down by 1,442. So we can put that at the top of our answer. We've got a decrease in payables of 1,442. And remember, for liabilities, the sign, whether it's positive or negative, will link with the direction of travel for the liability. So payables have gone down, and therefore cash has gone down. So I want to have a minus 1,442 here. Okay, so I forgot to highlight the bank loans. There we go. So there's our bank loans. We've used the payables. Next, we have a tax liability. So for my tax liability, like with my dividend payable, I want to use a T account for that as well. So what is the tax payable? So I've got a brought forward payable for tax of 1,843, and I'm going to show a carried forward payable of 1,965. So similar to my dividend payable, I want to know how much cash we've paid. But to be able to do that, I will need to know how much the tax expense is. Again, I could just look it up. I could scroll up to find that information. But again, in the exam, it can be quite time consuming to be scrolling around everywhere. So I'm not going to do that. I'm just working methodically down the information given to me so I don't lose myself. And then the last line in the statement of financial position relates to the overdraft. Again, we've got an overdraft last year of 172. So that's negative cash. So right at the very bottom of my answer, I can put in a negative 172 for the cash and cash equivalents at the beginning of the year. Now what I can do is, if I know that I had 416 of cash now and I have negative 172 a year ago, then these two numbers can come together to show me that overall I have increased my cash by 588. Okay, that's the 172 plus 416. Now there are two ways you can work out that number. Okay, so you can also take these three totals, and that should be the same as well. But potentially there's a bigger risk of you getting numbers wrong in this section than there is of getting the numbers wrong with those two cash numbers. So we'd recommend that you work out your total change in cash and cash equivalents by working backwards from the bottom two numbers rather than try to work out the sum of the three subtotals for operating, investing and financing activities. Right, so we've now gone down all of our balance sheet. There are still two sets of numbers we need to look at, but we'll come on to that a little bit later when we look at the notes. Next then, I'm going to turn to the statement of profit or loss. Now in this case, we don't need to use all of these numbers. Okay, so we need to be a bit selective here. So what we do need to use though is the profit for the business but before tax. We need the profit before tax figure, 8793. And that's going to be the very first number in our answer. Here's my profit before tax. And what else do I want to use? I also want to use the tax number. So there's the tax 1741. That's my tax expense. And I'm going to put that into my working. So now that I've done that, if I balance off my account, I can work out that my missing figure is 1619. So that's how much cash I paid to the tax authorities. So we can put that into our answer. Yeah, so we've paid 1619, and we've paid that to the tax authorities, so that needs to be a negative number. Okay, what else can we look at in our statement of profit or loss? So what else? We can see right at the top, there is a loss on the disposal of property, plant and equipment of 189. So that is an expense in the profit and loss, but it's not the cash though, is it? Because if you think about how do we calculate that loss, we would have the proceeds from selling the asset. We would then deduct from that the net book value of the asset. And then that will give us, well, in this case, it's a loss of 189. So once we've worked out the other numbers, we'll be able to find out which missing number we need to put in our answer. But anyway, that loss, though, is a non-cash transaction. So we need to put that loss in our answer. So we got the disposal of property, plant and equipment. It was 189. It was a negative number in the profit and loss account, so it needs to be a positive number in these adjustments. Okay, is there any other number here? Yes, the other number we want to use are finance costs, 1347. So that figure may be cash, but it may not be, because it could be there are some accruals included in that. So again, what we want to do is set up a T account for our interest payable, here we'll have our brought forward balance and our carried forward balance. And in this case, we've got our expense of 1347, and we want to know what our cash position is, which is going to be our missing number. So that 1347 may include some accrual, so it may not be cash. It probably is mostly cash, but there may be some accrual included in there which is not cash. So we can put our 1347 into our answer as our finance cost. So notice that we have our finance costs at the top of this part of the answer, but we've got interest paid here. So there's 2 lines for interest in operating activities. And in many cases, the numbers are the same, but they may not be if there's any accrual or interest payable. Okay, we don't know that yet. So we've put in the expense at the top, but we still need to work out how much cash was paid to the banks. Okay, so those are the numbers that I want to use in my statement of profit or loss. Yeah, all the other figures are basically just telling us how much the profit before tax was. Okay, so I don't really need to use any of the other ones. Okay, so then we need to look at the notes that appear at the bottom of the information given to us. So we've got our depreciation charge. Now remember, these numbers will be needed to be used twice in our answer. So we've got depreciation of 6572. So that is a non-cash expense. So we need to put that at the top of our answer. So we have there 6572. So we've used that once so far, haven't we? Now we need to use it a second time. And the second time is going to be part of our property, plant and equipment. So we have our depreciation expense of 6572. Okay, so I've now used that number twice. So yeah, I'm happy with that now. Next, it tells us the property, plant, equipment with a carrying amount of 486 was sold in the year. So carrying amount of 486, so that means I can put it into my property, plant and equipment working. So my book value goes down by 486. That's a disposal on the credit side. But remember, each of these numbers needs to appear twice. So where else am I going to use that disposal? Well, I started a working over here, didn't I, with our disposal? Yeah, so we got 486 as my net book value. Yeah, that was how much the asset was worth. But I've made a loss on the sale, which means I must have just received 297 as the proceeds. And so I sold it for 297, giving me a loss of 189. So that 297 can now appear in the second part of my answer. It's part of my investing activities. So we've got the sale of property, plant and equipment, and 297 was the cash that came in. Okay, so I've used that 486 twice in my answer, haven't I? So I'm happy with that. So yeah, I could just highlight the numbers I've used. Next, land was revalued upwards during the year by 4 million. Oh, well, we used that already, didn't we? Okay, that appeared already in our answer. We have our revaluation as part of our property, plant and equipment working. So here we've dealt with that. Next, all sales and purchases were on credit. Other expenses were paid for in cash. Okay, so that's giving you some background information there, again, which you're likely to see that statement in your question as well. And then finally, a dividend of 2,000 was paid. Okay, well, we managed to work that out, didn't we? Oh, but it says it was paid. Okay, and yes, we can see, can't we, in our balance sheet, there is no dividend payable, is there? Okay, if we look at our captions there for current liabilities, there is no dividend payable and there's no interest payable either. So when we look at our dividend payable, we can see there was none at the beginning, none at the end, and therefore, yes, that 2,000 was fully paid in cash. So yeah, in this particular question, we don't need to worry about the dividend payable, but in your assessment, you might have that. So we've shown you the technique of how to deal with that now. But anyway, we still need to put that into our answer. So that's part of our financing activities. So we have our dividend paid of 2,000. Remember, that's a negative number, isn't it? Because we've paid the cash out. Okay. Is there anything else we can deal with? What about our interest? So again, there's no interest payable in the balance sheet, whether carried forward or brought forward. So that tells us that our cash figure, we must have paid all of that through 1347 to the bank. Okay, so there is no accrual for us to deal with here. So in our answer then, under interest paid, we're going to put the 1347. So notice that this number is shown twice, one as an adjustment to profit and then one as a cash figure. So it just so happens, because there is no interest accrual, that these two numbers are the same, but they don't have to be. Okay, so it looks like in the top part of my answer, we completed all of the numbers. So notice that some of the numbers would be automatically calculated in the exam software. But anyway, let's pop those numbers in just so we can see what they are. So our cash generated from operations are 14823. So remember, we had our profit of 8,700, but once we've reversed all those non-cash transactions and we've adjusted for the working capital, the actual cash generated by the business is 14,823. But from that, we paid tax and interest. So we have a cash from operating activities of 12270. Remember, that's our starting position for the next part of our answer. Okay, is there anything else for us to deal with? Because it looks as if I'm pretty close to the end now. So let me have a look at my balance sheet. Oh yes, notice, look, we still haven't dealt with our share capital and share premium. So notice how that's obvious, because we've not highlighted those numbers. So it's helping me to control my answer and work out what's going on. What have I dealt with? What do I still need to work on? So I still need to work on the share capital and share premium. So in the notes, it didn't tell us about any bonus issue. Because remember, a bonus issue would be where we give shares away for free. So if we've not given away shares for free, it means that have we gone from 24 to 32, then we must have sold those shares for cash. And we must have sold them for a premium as well. Remember, share premium is where we sell the shares for more than the nominal value of those shares. So collectively, between those four numbers, we can see there's an increase of 12,380. So that must be how much money we've raised by selling shares. If there was a bonus issue, then it would have to be in the information that appears below the tables, and we'd have to reduce that figure by whatever bonus issue there was. But anyway, that 12,380 can go into our financing activities. We have a share issue, and that's money coming in. So the exam software would work out a total for us here. So that's going to be the 16,480. Okay, so I've now highlighted everything in the balance sheet. So I've dealt with all of the numbers. I'm having a look. Is there anything I've missed? No. So there's some subtotals there, but let's not worry about those. And then in the statement of profit and loss, we don't want to use all those numbers anyway. So we've used the loss, we've used the interest, we've used the tax, and we use the profit before tax. So are there any workings that we've not finished off yet? So notice that, so all these red boxes, they've all got a number inside them. That's good. But what we don't have, though, is our property, plant, and equipment. So in your assessment, you will typically either be asked to calculate depreciation or to work out how much money we've spent on additional new assets. So typically what will happen, the question will either give you the depreciation number and you've got to work out additions, or the question will give you the additions and you've got to work out depreciation. So in this case, they've given us depreciation. we need to work out how much money they've spent on buying additional new assets. So yeah, I just need to balance off the account. So we just work out our totals. And that can give us our balancing figure. We must have spent 28,459 on new assets. So we can put that into our answer. So yeah, we've purchased new property, plant and equipment, and we've spent 28,459. And remember, this is a negative number because we're spending cash to buy those assets. So that gives us a new total of 28,162 for investing activities. So what we can do now is just check that everything works. If we take our three subtotals and add them together, yes, it gives us the 588 increase in cash and cash equivalents for the year. So that's our check to make sure it works. Okay, so notice we've not used the workings given to us, but if you've got time, it'll still be a good idea to complete those workings, because if you've made any mistakes, then the markers will look at those workings and try to give you some marks if they can. So remember, for our disposal, we will have our proceeds. We sold the asset for, well, again, it depends on what the drop-down menus are. So yeah, I think we need to work out the proceeds, don't we? Yeah, that was the missing number. So yeah, we would have used our net book value, which was 486, and then we had a loss, didn't we, of 189. So yeah, that it would give us our 297. So there's the table. But again, the table can be quite tricky to work out because that's not normally the way that we'd use those numbers. Normally we'd start off with our proceeds, take off the book value, and that will give us our loss. So the order of this can be a bit confusing. And then what about for the second working? So yeah, we got our property, plant, equipment at the beginning of the year. But remember, we had our depreciation. So that was the minus 6572. We had our disposal, so that was the minus 486. We had our revaluation of 4,000. Okay. And then we had our carried forward balance, didn't we, of the 72916, and that gave us our additions of the 28459. Okay, so the structure of these workings is a little bit unusual. So yeah, we'd strongly recommend that you do your workings on the scrap paper provided in the exam. So whether you want to do your workings in the form of a T account or whether you want to do your workings in the form of a column, it doesn't really matter, okay, as long as it works in your head and you get the right number. Finally then, we have our statement of changes in equity, and we can complete these figures from the information in the statement of financial position and the other data that we've got. So yes, from our statement of financial position, we've got our opening balances for share capital. It was the 24,000, our share premium. We had no revaluation surplus, did we? And our opening retained earnings, 6190. Again, notice that the total would be automatically calculated for us. And then what about our profit for the period? So the wording here is a bit wrong, really. We would show this as our total comprehensive income. Okay, that would be the correct terminology for this, because it's more than just profit. Yeah? So we've got our profit for the year of 7,052, but remember there's also 4,000 of other comprehensive income, giving us our total of 11,052. So yes, this should really be total comprehensive income, not profit. And then dividends, yeah, we worked out that we had that 2,000 dividend, didn't we? And then that would give us our total retained earnings at the end of the year. Yeah, our total revaluation at the end of the year. And then, yeah, we had a share issue, didn't we? So, yeah, we finish off with 32,000, don't we? So that means there must have been an increase of 8,000 in the share capital. And then for our share premium, at the end of the year, it was 6,530. So we sold those shares for 4,380 in excess of their nominal value.